Welcome back to Phoenix Podcast, hosted by Amin Moanian, where we deep dive into politics and economics and explore the philosophies and histories behind today's challenges.
Hmm.
This time we're diving into the world of capital gains taxes, which is especially interesting in economies struggling with inflation, like we are right now.
Yeah, capital gains taxes are a hot topic, and understanding them requires us to think about individual freedom of government intervention and how markets really work.
Okay, so for our listeners who might be thinking capital gains, is that like when Superman gets stronger under a yellow sun?
Right.
Let's start with a simple explanation.
Okay.
What exactly are we talking about here?
Imagine you buy a vintage vinyl record for $20.
Okay,
A few years later, it's a collector's item, and you sell it for $100.
all right,
That $80 profit is your capital gain.
okay.
It's the increase in value of an asset you own.
So it's not about taxing what you originally paid, but the extra money you make when you sell it later.
Precisely.
Okay.
Now, a capital gains tax is simply a tax on that profit.
Hmm.
Governments use it to generate revenue, but it also has other implications we'll discuss.
So you buy low, sell high, and the government takes a cut of that sweet, sweet profit, but hold on, our source material also mentions inflation
Right.
and how that throws a wrench into things.
Sure.
Can you break that down for us?
Imagine that in the time you held on to that record prices, for everything went up, meaning your money doesn't buy as much as it used to.
Okay.
That's inflation.
Right.
Maybe that original $20 you spent is now worth $40 because of inflation.
So while it looks like you made an $80 profit, you're actually not as rich as you'd think because the value of money itself has changed.
Exactly.
Okay.
Some people argue that taxing capital gains during periods of high inflation is unfair because it doesn't account for that loss of purchasing power. You're essentially being taxed on gains that are partially or maybe even fully an illusion.
That's a great point. It almost feels like being penalized for just trying to keep up with rising prices.
Right.
And this ties into a core principle of classic liberalism, right?
Yes.
The idea that individuals should have the freedom to manage their own finances and protect their economic well-being.
Absolutely. Classic liberals advocate for limited government intervention in the economy, arguing that individuals are best positioned to make decisions about their own resources.
Right.
A capital gains tax, especially during inflation, can be seen as limiting that freedom by hindering people's ability to protect their savings.
It's like the government stepping in and saying, hey, we know inflation's eating away at your money, but if you try to find a safe haven for it, we'll take a cut of that too.
It definitely raises questions about the role of government and the balance between generating revenue and protecting individual economic freedom.
And that's just scratching the surface.
Yeah.
Our sources dive into some fascinating arguments for and against capital gains taxes, the potential unintended consequences, and even the psychology behind how people perceive them.
We're going to unpack all of that coming up after a short break. Stay with us.
Sounds good.
All right, welcome back.
All right, we're back and ready to dive deeper into the world of capital gains taxes.
Let's get right into it. We were just talking about how inflation can complicate things, and I think it's a great segue into one of the key arguments in favor of capital gains taxes, their potential to curb what's called speculation, especially in markets like real estate.
Okay, speculation, that sounds kind of shady, like something out of a Wall Street thriller.
Right.
What exactly is it, and why do some people see it as a problem?
Imagine everyone's buzzing about a new neighborhood saying property values are about to skyrocket. People start frantically buying houses not to live in, but to quickly sell for a profit when the price goes up. That's speculation buying something, hoping its value will increase rapidly, not for its inherent usefulness.
So it's like flipping houses, but on a much bigger and faster scale. And I could see how that could be a problem if everyone's just trying to make a quick buck. Prices could get inflated way beyond what's reasonable, right?
Exactly. It creates a bubble that's bound to burst, eventually leading to a crash like we've seen with housing markets in the past. Proponents of capital gains taxes argue that taxing those quick profits disincentivizes this kind of frenzied speculation, promoting a more stable market.
It's like a speed bump to slow down those runaway prices. But our source material also suggests that speculation isn't always a bad thing. Didn't we talk about how classic liberals value individual freedom in the market? How does that fit in with the idea of discouraging speculation?
That's where things get really interesting. Speculation, while it can lead to instability, also plays a vital role in how markets function. Think of it as a way of managing risk and uncertainty.
Okay, give me an example. I'm a little lost.
Let's say there's a new technology everyone thinks will be huge, but it's still unproven. Some investors, the speculators, are willing to take the risk and invest early. Their willingness to buy drives up the price, signaling to others that this technology might be worth betting on.
So it's like they're putting their money where their mouth is, and that can encourage more investment and innovation.
Exactly. Speculators, by taking on risk, can help promising ventures get off the ground. And their buying and selling activity provides what's called liquidity to the market, meaning it's easier to buy or sell assets quickly.
So it's a double-edged sword. Speculation can create bubbles, but it can also grease the wheels of the market, making it more responsive and efficient.
Precisely. And that brings us back to the classic liberal argument. If individuals are free to make their own choices about risk and investment, even if those choices involve speculation, it can ultimately lead to a more dynamic and prosperous economy. A capital gains tax, by discouraging speculation, could potentially stifle this dynamism.
This is giving me a bit of a headache. We got arguments for and against capital gains taxes, and it seems like both sides have valid points. How are we supposed to make sense of all this?
That's the challenge with economics. It's not about finding one right answer, but about understanding the trade-offs involved in any policy decision. In the case of capital gains taxes, we need to consider not only their potential impact on speculation and market stability, but also their effect on individual economic freedom and the incentives for investment and innovation.
I'm starting to see that there's a lot more to this than just whether or not the government gets more money.
Absolutely. And we haven't even touched on some of the other potential unintended consequences of capital gains taxes. Things like market distortions, where people shift their investments in ways that might not be the most economically beneficial just to avoid the tax.
That sounds like it could make things even more complicated. And let's not forget the administrative burden of actually implementing and enforcing a capital gains tax that can't be cheap or easy.
You're right. There's a cost to collecting taxes, and that cost needs to be weighed against the potential benefits.
So it seems like figuring out whether a capital gains tax is a good idea or not depends on a whole bunch of factors. What are some of the key things to consider? It sounds like we're wading into some pretty deep waters here. Is there a simple checklist we can use to decide whether a capital gains tax makes sense in a given situation?
Unfortunately, there's no easy formula. Economics is about people, and people are complex. But I think there are a few key questions we can ask to get a better handle on this issue.
Lay 'em on us.
First, what's the state of the economy? In a booming economy with low inflation, a capital gains tax might be less problematic. But in a struggling economy with high inflation, it could add to the burden on individuals and businesses.
So context matters. You can't just apply a one-size-fits-all approach.
Exactly. Second, what's the goal of the tax? If it's primarily about generating revenue, there might be other less distortive ways to do that. But if it's about curbing excessive speculation, we need to carefully consider the potential trade-offs, like we've been discussing.
Right, because trying to fix one problem could create others.
And finally, and perhaps most importantly, how will people perceive the tax? If they see it as unfair or as targeting their hard-earned savings, it could undermine trust in the government and the economy as a whole.
That's a crucial point we touched on earlier. Public perception can make or break a policy, even if it looks good on paper.
Absolutely. And that ties back to those classic liberal principles we've been weaving throughout our conversation, the idea that individuals should be free to make their own economic choices, and that government intervention should be limited and carefully considered.
So it's not just about numbers and formulas, but about understanding human behavior incentives and the values that underpin a free and prosperous society.
Well said. I think that's a great place to leave our listeners with a final thought.
What's that?
As you navigate this complex world, don't be afraid to ask tough questions, challenge assumptions, and think critically about the policies that shape your life. Economics isn't just for experts. It's about understanding the forces that influence our everyday choices and the kind of society we want to build.
Couldn't agree more. Thanks for joining us on this deep dive into the world of capital gains taxes. We hope you've come away with a deeper understanding of the issues at stake and a renewed appreciation for the power of economic freedom.
It's been a pleasure.
And for our listeners, remember to keep exploring, keep learning, and keep those critical thinking caps on.
Until next time.